Welcome to today's market report.
European stocks sank on Thursday, posting their worst session in 2 months, with all sectors in the red as concerns about the resilience of economic recovery sent investors fleeing to bonds. The Pan-European Stock 600 index dropped 1.8%, with the European Central Bank moved to shift its inflation target to 2% from below but close to that figure, seen as dovish and doing little to cap declines. Achieving 2% inflation won't be easy, according to JP Morgan Asset Management. With low inflation even more entrenched in the Eurozone, this change from the European Central Bank means policy will remain loose for even longer. Eurozone banks slid nearly 3% as government bond yields extended their force, while many investors struggle to fully grasp the triggers behind the global bond rally. A broad rethink of the reflation narrative and a sense that economic growth may have peaked are common explanations, together with hedge funds unwinding bets gone wrong. The day's slide pushed the stock 600 into negative territory for the month, putting it on course to break a 5-month winning streak. It is now 2% away from the record highs. Until Wednesday, the index was only off 0.2% from the peak of 460.51. Deteriorating economic indicators from the continent, as well as United States and China, have dented sentiment lately, with the rise in coronavirus cases as well as the spread of a new variant, spelling more trouble as countries scramble to curb its spread. Miners were down 2.8%, while automakers fell about 2.3%, as BMW and Volkswagen slipped after the European Union fined them a total of $1 billion for emissions cartel. Dutch technology investor Prosus, which has 29% stake in Chinese tech giant Tencent, fell 4.1% as the sector came under pressure globally. German automotive licensing group Hella slipped 1.4% after brakes make corner Breeze dropped plans to acquire a 60% stake in the company. Remote connectivity software specialist TeamViewer tumbled 14.3% on weaker than expected billings growth in the second quarter. British food delivery company Deliveroo rose 2.3% after it posted 66% jump in orders during the June quarter. The US crude was down 0.05% at $73.21 per barrel. Brent was down 0.01%, trading at $74.36 per barrel. Gold futures was up 0.03%, trading at $1,803.75 per ounce. On the FX front, the FX markets are showing a distinct risk-off flavor on Thursday. The mood is weighing on currencies such as sterling, that has fallen to its lowest against the euro in more than 3 weeks, and to just pips away from the early July lows of $137.31. The cable was down 0.15% on the day after falling from a high of 138.05. There has been a broader shakeout in FX markets that has aided the safe havens in the wake of minutes of the latest Federal Reserve meeting that confirmed its policymakers were moving towards tapering this year. The minutes showed that some Fed members saw the conditions for tapering being met sooner than they had anticipated at previous meetings. The bottom line is that some are pushing for tapering sooner rather than later, and some are counseling patience. With this split in place, it seems tapering is not likely to be imminent. While we expect the debate to continue and intensify at the July 27th to 28th meeting, we don't think the Fed will commit to tapering yet. So far this week, sterling has found some support on the Prime Minister Boris Johnson's plan to end social and economic COVID-19 restrictions in England. However, the number of coronavirus cases could be set to climb as measures are relaxed, which will keep investors anxious. The euro-dollar pair peaked at 118.67 but retreated from the level, weighed by a dismal markets mood. The US dollar has racked up gains since hitting a bottom in May, however fell by 0.29% for the day to 92.37.
This is today's market news. Thanks for listening. We'll see you next time.